Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. I'm going to go through Microsoft's results from last night. There's a lot to be excited about, so let's just jump right in. So here's the thing. In 2020 so far, there's this large discrepancy between megacaps and smaller caps. So large caps, for example Microsoft, you can see have been very strong performers. They're trading close to all-time highs. And there's this question whether too many investors are passively investing and are forcing these large caps to be priced increasingly higher, and whether that's justified or not. And I think that there is a certain element of justification here, and I don't think that the market is being completely irrational. At the same time, I have to admit that smaller cap stocks, which is what I invest in, many of these stocks are now firmly into correction territory. Many of these stocks are now trading at least 20% of their highs. So there's this interesting dynamic happening in the market, but while the discussion about small cap stocks can be for another time, I don't think that Microsoft is particularly expensive. And as we're going to go through, I think there's a justification for its valuation. Okay, so this is what I want to talk about, right? So Microsoft's Q4, so their calendar year is slightly misaligned. They just reported Q4 21. So as I go through, remember the fiscal year and calendar year are slightly misaligned. So for fiscal Q4 2021, they reported 21% top line growth. So if you think about it, Microsoft still, right now, is still growing at more than 20%. This is absolutely mind-blowing that this late in the game, there are not many companies out there that typically survive a 30-year period. If you look back to the 2000s, Microsoft was the strongest leader then, and we fast forward 20 years and it's still at the top of its game. I mean, it's unstoppable, and I just, I'm blown away as an investor to think about this. I have no position in Microsoft, but I'm just still really compelled to follow this. So does the law of large numbers at any point start to slow down this giant? So this is a question that I think that there are so many different elements we can discuss here. But if you think about it, during a 90-day period, Microsoft brought in more than 46 billion in revenues. It just makes your mind think about it, right? So it's showing that there's no physical reason for Microsoft to slow down, because ultimately it's just so entrenched. But you can see that the growth is really spread. So I highlight a few things. So for example, Bing was up 53% year over year. LinkedIn was up 46%. Microsoft's enterprise resource planning, which is Dynamics 365, was up 49%. So it's a range. It's very diversified. It's not just one aspect. Having said that, the crown jewel in this quarter, I think, was in the commercial cloud. This was up 36% year over year, and it brought in 19.5, just under 20 billion in revenue over a 90-day period. That was up 45% year over year. Well, let me rephrase that. As within that, Azure was up 45% year over year in constant currency. So this is really the needle mover at this point in the game. Is really cloud, how it's performing. But if you think about it, right? So yeah, on the one side you have this kind of dynamic where some of the old tech companies would be willing to just take the household name. So they'll think, okay, no IT company, no head of IT is going to say, we went to Microsoft and that was a bad decision. It's the easy decision, it's the no-brainer decision. On the other hand, the figure that I wanted to highlight is that 75% of the Fortune 500 use Microsoft's hybrid offerings. So these are companies that have the financial resources, technical acumen, and they're still really going after Microsoft and saying that Microsoft products have enough differentiation to solve a lot of their problems. So this is just a case that Microsoft's investment, multi-year investment into the cloud has really, is really paying off. And I know that everyone says, AWS was the first one on the scene, but in technology it doesn't matter. You've seen this time and time again. First move advantage doesn't matter in tech. It just simply does not matter. And this is being represented here with a very strong EPS growth in the quarter. So this quarter, EPS numbers the non-GAAP currency adjusted was up 42% year over year. And this implies that over the trailing 12 months, EPS numbers were up 34%, okay? So this is number one to think about, 34% over the trailing 12 months. And if we expect a slight slowdown into the next year, we're looking at approximately, by my estimates, if it grows by 30% year over year, we're looking at $10.36 in EPS. So, okay, how did I get at that number at 30% EPS growth? So it grew at approximately 34% last year over the past 12 months, but over the previous 12 months, it was up 25%. But CFO Amy Woods talks about a very healthy double-digit growth and margin expansion for Microsoft over the coming year. So altogether, I think we have this range, and I think it has what it takes with the momentum that we're seeing from Microsoft for it to grow its EPS at 30%. I think that this is very, very reasonable and in the right ballpark. So that implies the stock right now is priced at 28 times forward earnings. I think that this is, a justification. If you see the company is growing at 30% its bottom lines and is priced at 28 times forward earnings, I mean, it's very, very justified in the market right now. There's so many tech companies that have absolutely no path to profitability, that are struggling to grow at 20%. And, many of them are coming up with decelerating growth as it comes up against the strong comps from last year. And, they're kind of coming in below that 30% top line growth. So for Microsoft to be the EPS number to just growing at 30%, I think that's very, very compelling. Having said that, as I noted at the start of the video, I'm much more of a small cap investor. I prefer to go into something that the outlook is not so favorable. I'm willing to take a bit of a gloomy outlook into a company, and if the price makes sense. Ultimately, I'm a value investor, so for me, price is everything. And I'm looking really to buy into companies that are slightly misunderstood by the market, and the valuation is really, really compelling. So if you wanted to find out which stocks I own just for a source of ideas, I'm not replacing what you do, but if it's a source of ideas, check out my marketplace. It's called Deep Value Returns on Seeking Alpha. You're welcome to do a totally free trial. Cancel anytime before 14 days. You won't be cancelled anything, so you have absolutely no reason not to try. See you soon.